Welcome to the debate. Today, we are looking at an asset that has crashed 96% from its all-time high. It trades less than $700 a day in volume, and yet, well, it might actually be the most meticulously calculated artificial intelligence play of 2026.
Or, if you look at those same exact numbers without the rose-colored glasses, it might just be a dead coin. A total ghost town.
And that is exactly the tension we are exploring today. So we are looking at Moon AI, trading under the ticker MOONI, and its highly specific role within the meme-linked, or MK, ecosystem.
Right.
This whole discussion stems from a rather provocative piece published on Normie Crypto titled The Contrarian Angle, 96% down, 100% locked. And the central question that article forces us to answer is whether Moon AI represents a structurally sound ground floor opportunity ahead of a major application launch, or if its extreme microcap metrics reveal a fragile, highly speculative asset where the risks heavily outweigh the narrative.
Yeah, and to frame that, if you walk out into an empty field and see a massive multi-ton concrete foundation poured into the dirt, your reaction depends entirely on whether or not you have the blueprints.
Right, exactly.
To most people walking by, it looks like an abandoned construction site, a massive sunk cost, just, baking in the sun. But if you have the architectural plans, you know it is the exact structural groundwork required before a skyscraper can be framed.
I love that analogy because a foundation without a building is just a very expensive slab of concrete. It's all potential energy, right? Without execution, it serves absolutely no functional purpose.
None at all.
But the blueprints in this case are what founder Pablo Crow calls his 10-year plan, spanning 2026 to 2036. And the premise of the 2026 crypto landscape is this shift toward the agentic economy, the idea that AI agents are now actively handling on-chain data, executing transactions, and curating our digital experiences.
Look, the overarching AI narrative in crypto is undeniable right now. If we look at market leaders like BitTensor sitting at a $2.2 billion market cap?
Yeah, something like that.
Or Fetch.ai at $141 billion. It is abundantly clear that decentralized AI is capturing massive capital. But, and this is a big but, we have to draw a razor-sharp distinction between those multi-billion-dollar infrastructure giants and Moon AI, which is a microcap token currently sitting at a $61,000 market cap.
Sure, it's tiny.
We cannot let the halo effect of the broader AI sector blind us to the pure market reality of this specific token.
But that market reality is exactly why it is compelling. Moon AI isn't trying to compete with BitTensor. It is not trying to be a standalone novelty chatbot floating out in the void of Web3.
Okay, but
Let me finish this point. It is explicitly designed as the intelligence layer for the meme-linked social platform. Meme-linked is aiming to be an uncensored, crypto-native alternative to legacy platforms like X and Instagram. And Moon AI is the engine that powers its content discovery algorithms, separating signal from noise and providing token-gated AI tools directly to those users.
Right, but let's look at the mechanical plumbing of this token today, right now. It has experienced a 96% drop from its November 2025 all-time high of 0.00025. It has a 24-hour trading volume of exactly $679.
Which is incredibly low, yes.
Framing a 96% drawdown as an all-time low opportunity, as that Normie Crypto piece suggests, completely ignores the fundamental reality of extreme illiquidity. Its utility is currently exactly zero.
Whoa.
It is entirely dependent on the speculative success of a secondary platform meme-linked that hasn't even launched its mobile application yet.
Okay, but let's move from the high-level metrics to the specific mechanics of how Moon AI generates value. You mentioned it relies on meme-linked. Yes, it does. But the Normie Crypto analysis points to projected ecosystem revenues of $2 to $8 million in the second half of 2026 through premium verifications and AI-integrated ad models on meme-linked.
Projected being the operative word there.
Sure, but that revenue is a financial backstop. When a user logs into MK, the feed isn't just a chronological dump of posts. The Moon AI agent curates it. If a creator wants to access premium curation analytics or localized AI generation tools, they need the Moon AI token. That is locked-in utility.
I'm sorry, but I just don't buy that. Let me tell you why.
Go ahead.
what you are describing as a strength, this total integration into the meme-linked ecosystem, is actually a fatal structural flaw. Moon AI's value is entirely derived. It has zero intrinsic value on its own.
I mean, most Web3 utility tokens have derived value.
Yeah, but if meme-linked fails to pull millions of entrenched users away from established giants like X or Instagram this July, what happens to Moon AI? The AI layer suddenly has no data to process, no users to serve, and no revenue to capture. The entire 10-year plan evaporates if the July mobile app launch doesn't achieve massive, immediate mainstream adoption. It's an engine without a car.
But that is exactly the point. It is an engine built for a specific car. Think of Moon AI as a highly specialized high-performance engine designed exclusively for a custom race car.
Okay.
You are judging this engine as if it is supposed to be sold on the open market to compete with a Ford or Toyota daily driver. It isn't. It doesn't need to appeal to the broader market on its own. It only needs its specific host vehicle, meme-linked, to cross the finish line. Why should we judge this specialized intelligence layer as if it is meant to win a completely different race?
Because in the financial markets, the engine is being traded separately from the car. If you could only buy Moon AI by using meme-linked, I might actually agree with you, but it is an actively traded asset on decentralized exchanges right now.
Well, yes.
And if the ecosystem synergy is so perfectly designed, how should we interpret the current trading data? We have to move from the theory of the ecosystem to the harsh reality of the order book. Let's really drill down into that $679 of daily volume.
The volume is objectively thin. I am not debating that.
Thin is a massive understatement. In market mechanics, this is a classic Roach Motel scenario for investors. You can check in, but you cannot check out. Let's actually walk through what happens if someone listening decides to drop $5,000 into Moon AI today because they believe in this ground floor narrative.
They would become a significant holder.
They would become a whale in a microscopic pond, and that is a very dangerous place to be. Decentralized exchanges like PancakeSwap use automated market makers.
Right, the AMM model.
Exactly. They rely on a constant product formula, basically a pool of BNB paired with a pool of Moon AI. When daily volume is under $700, the liquidity pool is incredibly shallow. If you try to exit a $5,000 position, your transaction alone severely unbalances the pool.
You'd get some slippage, sure.
You are removing so much BNB and adding so much Moon AI that the algorithm mathematically crushes the token price to compensate. You would experience massive slippage. You would essentially crash the price against yourself on the way out, maybe walking away with a fraction of your initial capital.
I see why you think that, but let me give you a different perspective on how this works. You are describing the mechanical reality of literally any microcap token. Investing at a $61,000 market cap fundamentally requires absorbing this exact type of liquidity risk.
It's a huge risk, though.
But that is the premium you pay for the asymmetry of the potential upside. If you want deep liquidity where you can move 100 grand without moving the chart, you go buy Bitcoin.
True.
But if you are looking at an asset sitting at 0.00008865, requiring a 28x multiple just to return to its previous all-time high, you have to accept the order book realities of the accumulation phase.
But a 96% drop implies the market has fundamentally rejected the asset. It doesn't imply an accumulation phase. It implies abandonment.
Or it implies the speculative froth has been entirely flushed out, leaving only the structural baseline. And this is where we have to look at the safety mechanisms outlined in the source material. Out of a 1 billion token maximum supply, 31.25% has already been permanently burned.
Okay.
We are left with a final circulating cap of 687.5 million tokens. Furthermore, 100% of the liquidity is locked on PancakeSwap,
which just prevents the developers from stealing the funds in a rug pull. It doesn't mandate organic buyer demand. It just means the empty pool cannot be drained by the creators.
It does more than that. When you combine locked liquidity with a permanently burned supply, you create a deflationary floor. The incredibly low volume we are seeing right now is exactly what one expects to see in a dormant accumulation phase before a major catalyst.
If the catalyst even happens.
Right.
But if you wait until July when the meme-linked app launches and the volume arrives, the price is already moved. The lock liquidity ensures the foundation is cemented in place.
But the problem with the dormant accumulation theory is that it assumes the project can actually deliver on its technological promises when it finally wakes up. Given the severe financial constraints we just discussed, I mean, a $61,000 market cap, we must critically examine the technical feasibility here. The Normie Crypto report repeatedly uses the phrase decentralized intelligence,
which is the core ethos of Web3, taking the power away from the black boxes of Silicon Valley and putting it in the hands of the community.
The ethos, yes, but the physical execution? Let's talk about the hardware required for that ethos. Hosting genuine machine learning processes, training neural networks, and eliminating the centralized nature of models like ChatGPT requires immense, eye-wateringly expensive computational infrastructure.
Yes, AI compute is expensive.
NVIDIA GPUs are not cheap. Server farms are not cheap. And more importantly, Moon AI operates on the BNB chain.
Yes, it is a BEP20 token.
Right, and the BNB chain has strict block size limits and block times of around 3 seconds. You physically cannot run the matrix multiplications required for a 70 billion parameter large language model on-chain. The network would halt.
Well, obviously, you aren't running the model directly on the ledger.
So I have to challenge the basic premise here. How can a project with a $61,000 market cap afford to build or host true decentralized AI? The most probable reality is that Moon AI is simply acting as a crypto payment wrapper for an existing centralized API. They are likely just pinging OpenAI servers in the background. If that is the case, it isn't decentralized intelligence at all. It's just buzzword marketing applied to a standard Web 2 chatbot.
That is a very compelling technical critique. And frankly, if the goal of Web3 AI was to replicate a massive server farm on a blockchain block by block, you would be entirely correct. But I think that fundamentally misinterprets where the innovation actually lies in this specific sector.
How so?
Let me challenge your definition of decentralized AI. Doesn't the innovation here lie in the economic model rather than the raw computational hardware?
I don't follow. If the compute is centralized, the AI is centralized.
Let's walk through a concrete scenario. If I am a developer in Web 2 and I want to integrate AI into my app, I go to OpenAI, I hand them my credit card, and I rent API calls. OpenAI extracts that data, they centralize the profit, and they can shut off my API key at any moment if they don't like what I'm building. The power and the economics are entirely centralized.
Agreed.
Now look at Pablo Croce's 10-year plan for Noon AI and Meme-Linked. Even if the heavy processing isn't fully executing on-chain yet due to block size limits, the decentralization occurs at the access and governance level.
Access and governance.
Yes, users stake the Moon AI token to govern the discovery algorithm on Meme-Linked. They use the token to gate premium features. The community literally owns the gateway to the intelligence. You do not need permission from a centralized tech giant to access the curation tools, you just need the token. The community captures the value of the intelligence. That economic sovereignty, decentralizing the control and the economics of the AI, is the true innovation here, not necessarily hosting server racks on a ledger.
So you are arguing that decentralizing the monetization and the access is sufficient, even if the underlying compute remains a centralized black box.
Exactly. It is about who captures the value. When Meme-Linked generates that projected $2 to $8 million in revenue, that value flows back into the Moon AI ecosystem, rewarding the token holders who govern the protocol. It stops the value extraction of Web 2.
It is an elegant argument, I will give you that. It shifts the goalposts from technical infrastructure to economic game theory. But it brings us right back to the central problem.
Which is?
If the value is entirely reliant on the token gating access to Meme-Link's features, and Meme-Linked has virtually no users until the July launch proves otherwise, then the economic model is currently gating access to an empty room. The technical feasibility of the AI doesn't matter, and the economic sovereignty doesn't matter if the social network it serves fails to gain traction.
which is exactly why the normie crypto piece rightly identifies this as a highly contrarian, high-risk play. No one is pretending this is a risk-free treasury bond, but the structure is meticulously in place.
The foundation in the field.
Right. The 100% locked liquidity ensures the market isn't going to have the rug pulled out from under it. The 31% burn supply ensures that if demand does arrive in July, the price action will be explosive because the supply is permanently restricted. For those who understand the mechanics of microcap cryptocurrency, Moon AI's deflationary structure and its tight integration into a broader social ecosystem represent a highly asymmetric, calculated opportunity. You are buying the engine before the car is unveiled to the public.
It's fascinating. My perspective remains grounded in the present market reality.
Fair enough.
If I am listening to this discussion right now, I am probably screaming at my phone, it's a $61,000 market cap. It's trading less than $700 a day. And frankly, the listener would be right to think that. The extreme illiquidity, combined with a 96% drop from its all-time high, is a glaring warning of fragile demand. A locked liquidity pool is only valuable if there are actual buyers and sellers interacting within it. Otherwise, it is just capital trapped in amber. The total reliance on an unreleased social media app makes Moon AI structurally precarious.
I've found our point of convergence, however. Despite our different views on the risk profile, we both agree that the July 2026 meme-linked mobile app launch is the definitive make-or-break catalyst for this token.
Absolutely. The success of Moon AI is inextricably 100% linked to the success of Pablo Crow's broader ecosystem. If the app succeeds and pulls users from legacy platforms, the intelligence layer finds its purpose and the tokenomics kick in. If the app fails to gain mainstream traction, the token simply has no reason to exist.
This is why it is so crucial to look past surface-level crypto narratives. A token's price chart only tells you what happened yesterday. It doesn't tell you how the protocol functions tomorrow. We highly suggest our listeners explore the source material on Normie Crypto to further understand the technical mechanics of AI integration in decentralized platforms and to dive deeper into the specifics of the MK ecosystem.
Yeah, there is certainly a wealth of technical data there regarding how these neural-powered discovery algorithms are supposed to function on-chain and how the token supply is mathematically structured.
As always, we will end the debate here without declaring a winner, leaving the final judgment to you, the listener. Because ultimately, it comes back to that empty field. When you look at Moon AI's metrics, its deflationary tokenomics, and its deep integration with meme-linked, are you looking at the necessary, unseen groundwork for a towering skyscraper, or are you just staring at concrete drying in the desert?
A question only July will answer.
Thank you for joining us.